Hi everyone, welcome back to my YouTube channel. So this is Manisha and today video we are going to solve chapter 5 quiz, and previously we have solved up to question chapter number 4. Okay. So in case you have missed out those video, you can still access it from the playlist available on my YouTube channel at free of cost. No any subscription membership that you need to pay to access those video. So let's start the today video, and this is for the only financial accounting student. And these all questions are from the study hub. As you know, BBP and Kaplan is no longer approved content of the ACCA. So ACCA has launched its own resources. That's the study hub. So it's better to include this as well in your preparation phase, in preparation program, because you can use the Kaplan and BBP as well. It's not like that you can't use, but you can use that BBP and Kaplan to practice more or extra question. But yes, also don't forget to include study hub, practice question or the quizzes. It's very good one. So just give it a try. So let's do the chapter 5 in the today video. So first question, during the 3-month ended 30 June 20x2, June makes sales including sales tax of 55,000 and purchase excluding sales tax of 33,000. Assuming all transactions are subject to sales tax at 10%, how much does June owe the tax authority at 30 June 20x2? See, where the student get confused in this kind of question is first and foremost things. This sales tax is like the VAT, and if you are like selling the good, obviously we charge the VAT. That's the output one. And if we are selling the goods, yes, we charge the VAT as well in that to our customer, and that's the input. I think I said opposite. That means if we are selling the goods to our customer, we charge the VAT, and that's the output VAT. But if we have purchased the goods from somewhere, and that supplier might also charge VAT on us, but if we are VAT registered, we can recover those amount, and that's the input VAT. The question is the same thing, that John is making the sales as well as purchase. Yeah, the things that you need to understand is the VAT, the sales tax charge on sales is need to be payable to the tax authority, and the sales tax, those charge on the purchase, need to be recovered from the tax authority. And other thing that you need to understand is whether it's including sales tax or excluding sales tax. It's a huge difference. Small either can lead to the whole calculation goes wrong. Okay, so that's why it's very important to understand this. And I didn't find the notes here to solve this question. Okay, let me open the action and solve this question, and I will be back. So basically, question is asking how much John owed to tax authority at the year end. So here is the question I have solved on the Excel. So sales amount given is 55,000, and they said this is including sales tax. And other is the purchase amount, which is 33,000, and they said excluding sales tax. And there is difference between these two, and I will show you how. So first, in order to find how much John owed to the tax authority, we must know how much sales tax is on the sales and sales tax charge on the purchase. Okay, so let's take the first sales amount. Okay, sorry. So sorry, this one. Yeah. So let's take the sales amount. That's a 55,000. So they said including sales tax. What is the sales tax percentage? Let me remove this first. Okay, fine. So question said your sales amount 55,000 includes sales tax. What is the sales tax percentage? It's given in the question, that's a 10%. So if sales tax is 10% and our sales is 100%, so what do you think the amount given will be 110%? Why? Because they said it includes sales tax. So our sales value 100%, including the sales tax of 10%, this will make in total 110%. So that means this 55,000 is 110%. So now we need to calculate the sales tax value, and how we can calculate? We will take this value and multiply by 10% because we need to find the sales tax, and divide by 100. And why? Because this amount represents 110%, and dividing 100 by 110% means we are getting the value of 1%, and again we are multiplying with 10% means we are getting the value of 10%. So that's a 5,000. All right. Now same case goes for the purchase. So purchase they provided is your net amount, net purchase, and they said sales tax is of 10%. So what do you think? What is the gross purchase amount? It's 10 plus 100, it's 110%. So that means they have provided the 100% figure only. Why? Because they say excluding sales tax. So if we want to calculate the value of sales tax here, so again we will multiply by 10%, but here we will divide by 100, not by 110, because this value represent 100%, and dividing by 100% will give 1% value. All right. So we have sales tax on the purchase of 5,000. That means we need to pay 5,000 to the tax authority, and at the same time we need to recover 3,300 from the tax authority. So if we will net up this, so if sales tax here, sales tax is greater than this purchase tax, right? That means we need to pay to the tax authority, and how much amount? The net of these two. So by netting of these two, we will get 1,700. That's our answer A. Fine. Okay, next question. This is the second one. Okay, so I assuming that you guys have opened your study hub along with me, and we are solving the question together. So now second question says, which of the following statement about discount received are true? So are true means either one could be true or both of this could be true. Okay. So be careful with this is and are. Okay. So when a settlement discount is offered, the purchase is recognized net of the discount. This is not always true. Why? Because settlement discount is offered only if the buyer pays early. Okay. So at the time of purchase, we usually record the full amount. If the discount is taken later on, then we adjust at that time. So purchase is usually recorded at the full, not in the net. So one is incorrect. That means option A and C is out. Okay. So now next. When trade discount is received, a purchase is recognized at the net amount. Yes. So basically trade discount is given immediately at point of sales. So it's given upfront, like for buying in the bulk or for a loyalty customer. So buyer knows the final amount at the time of purchase. So purchase is recorded at the net of the amount. So this one is the correct. So that means option B is correct. The next we have, a purchase has been recorded in the on the receipt of goods obtained on the credit terms. So which of the following correct double entry to record subsequent return to supplier of these goods? So basically this is the reversal journal we need to pass. So when we have purchased good, we have recorded debit purchase and credit payables. Right, but now we are returning those goods to suppliers. That means purchase need to be reduces. So earlier we have debit, now it will be credit, and earlier we have credited payables, now it should be debit. So now it means the journal should be debit, trade payable, credit purchase. So if you will look at the option, there is only one option where the purchase is on the credit side. So A is correct one. Then next, a clothes manufacturer offer a clothes to the retail customer with a 10% trade discount on the list price. It expects that major customer to take advantage of further 5% from discount for the settlement within 10 days. Goods with the list price of 1,000 are sold to a major customer. What entry, if any, will be required to revenue account if discount is not taken? All right. So we will solve this in Excel. So here I have solved this question. The price of the goods was 1,000, and cloth manufacturer give 10% trade discount. The trade discount is given upfront immediately. So we will reduce 10% amount from this price, and the net amount will be our 900. Okay, after giving the 10% trade discount. But the question also says that it expects majority of the customer to take advantage of from discount 5%. Majority of the customer has taken. So the settlement discount of 5%. Settlement discount of 5% means 5% of now 900. Okay, so either you can calculate the value directly as well by taking 1000 multiply by your 90%, then multiply by your 95%. The value will be same as, oh, yeah, 855 directly. You can calculate directly as well. So now this settlement discount of 45 is deducted from 900. It will give the amount of 855. So that means we have recorded this transaction something like this: debit receivables, which will be 855, and credited sales 855, because we are expecting customer will be take discount, but customer didn't take discount. That means now customer, if this discount has not been taken, that means our sales value will be 900 and the customer have to pay 900. So that means we need to increase our revenue by 45. The question is asking from the revenue point of view. So we need to increase revenue by 45 because customer didn't take the discount. Increasing revenue means credit. So credit will be 45. That's option B. Now, next question. Which of the following concerns regarding petty cash is true? So, I must say you guys know about petty cash. So, basically, it's a small amount of cash kept for minor expense like celebrating your employee birthday, tea expense, postage, a small office item like pen. So, for this kind of expense, we keep certain amount of cash in the office. And in petty cash, every transaction is recorded to track where money is going, and so that it will prevent the theft as well, ensuring all spending expenses, whatever the amount we have spent is approved. Basically, this is a part of internal control to ensure that the business is safe and well managed. So first option is saying a record of petty cash transaction in the ledger does not collect information valuable to operation of the manager. So petty cash record do give useful information to manager. They help to understand small expenses pattern, right? So this is incorrect again. Now B is recording petty cash act as means of internal control. Yes, petty cash is mean for internal control, as I said. All right. So this one is correct. And the second last, approval for the petty cash transaction should be provided by the owner of the business. Approver should be your trustee employee. Trust one, the employee whom you trust. Not necessarily it should be owner. Okay. So it's incorrect. And the last is there is no need to record petty cash if it is replenished using the Impress system. So even you are using the Impress system, that is a fixed petty cash level every month, you still need to record every transaction for the control, right? And for replenishment, like how much amount we are in deficit, we will refill by the same amount to top up the balance, right? So that's why it's again incorrect. So our B is right, and here we go. Yes, we are done with this part as well. So now see you in the next chapter 6.